Today's interview is with Nick Love. Nick is a digital marketer specializing with helping multifamily syndicators. He does some investing as well himself. So really cool interview today. I learned a lot in this one, especially with the digital marketing aspect of things. It's so important to what we do these days. So stick around for all of that because he gives us so much great information in this interview. As always, like and subscribe on Wrestling with Real Estate, the YouTube channel. Go to the WWRE Podcast and give me a 5-star rating and write me a review if you think it's worthy. And I'm looking to speak to as many of you as possible. If you're interested in real estate, in whatever aspect that is, I'd love to schedule a 30-minute call with you and get to know you, find out if there's any way whatsoever I can help you. So there's going to be a link in the description down below, or go to wrestlingwithrealestate.com, the website, and there's going to be a link there. But stick around for today's great interview with Nick Love. You might learn some stuff about digital marketing. I know I did.
Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor, Barri Griffiths. Now today we have Nick on the call with us. Hey Nick, what's going on, man?
What's going on, Barry, man? I'm doing good, Thank you for having me on here.
No problem at all. I can kind of see through the lighting. You have a very stylish shirt. I'm digging your shirt, man.
Thanks, man. Express. That's all it is, baby. Yeah.
Cleanse it out. Oh, you really? I like it. So before we get into the conversation, which I'm excited to dive into today, can you tell us a little bit about your background and kind of what you're focused on right now?
Yeah, sure, man. So really my background is a lot inside of multifamily and digital marketing specifically, on there, just really helping, create brands, and then also, interested inside of syndications myself, whether that's helping people build up their syndication brand or really just, do my own deals, and I'm really more interested inside the capital raising. I think that's a really important aspect of the model, and where sometimes people may get choked up on because you can find a deal and you can underwrite it, but it's really finding the money too is, a major problem. But, before all this really, I got into school, here in Dallas, and I was going to school and learning some stuff about real estate, some stuff about land and industrial and things. And people were really just shoving down your throat the model of residential real estate, buying single family rentals, one a year, for 5 years or something like that. And it was just a model that I didn't like. It wasn't scalable. And, I didn't want to have to do all this work just to get a house, that barely cash flows, $200 to $400 a month, maybe on that side. And you're putting into all that work, whenever you could try to just really, focus your efforts maybe on something else. And so that's kind of what led me into kind of networking inside of the Dallas-Fort Worth area, going to meetups, talking with people, messaging on LinkedIn, and just trying to understand other facets of real estate investing, which really got me into multifamily. And I really, fell in love with the model, started reading more, learning, YouTube, podcasts, etc. And that kind of led me into the passion, of syndications and, being able to leverage my digital marketing background to work with other syndicators to understand the investment model and then do my own syndications and help people raise capital and grow their brands. So.
Very cool. Very cool. So what brought you to real estate investing to start off with, you think? How did you stumble across that and why?
Yeah. So my family wise, I really think that's where it started because my dad's in the military and he was really interested inside of tax sales and flipping land actually, from people. And so whenever I was very young, I was out, helping my dad clean land and then, flipping it a couple of months later, for a large profit. And then my mom is a CPA. And so just understanding the tax side, so I was able to see kind of both sides of benefits, whether that's, the, huge profits and then huge tax benefits. And so it just made sense. That was always in my mind that real estate is always going to be a part of the diversification strategy of my, portfolio. So it was just, what kind of real estate I wanted to get into. But I always knew in the back of my head since I was young that real estate's been, one of the best investments you can do, but it takes a lot of upfront capital. But
so why didn't you go into flipping land like your dad then?
Yeah, I didn't like it at all, because, some facets of it really, I mean, he was really interested inside of tax sales and putting a lot of upfront work into maybe getting a deal, maybe not. And so there was just too much volatility on that side, and you couldn't even trust, a lot of these different things. There's a lot of things that can go wrong. And as far as, I'm really big on scales and systems and operations and stuff, and that never seemed like a model that I could do long term anyway. So why would I really try to go in and do something that I don't even enjoy in the beginning, right? So it was trying to find something that I actually enjoyed. And, at the time, it wasn't really land or residential, and I kind of got into more commercial and office and industrial side. But then it wasn't very sexy or attractive, really to investors or to, as far as, working and connecting with more people. I wanted something very, very interesting, and that was on the up and up, really, because this is like 4 or 5 years ago. And, multifamily has gained so much intensity and competition, and you go as far as say saturation too, which is why digital marketing is even more important nowadays than it was before. But
yeah, very cool. So you jumped right into multifamily. You didn't even you didn't even do a single family to start off with, or?
No, yeah, I owned an apartment complex before I owned a house, so I was definitely all in to the multifamily for sure.
What was your first deal then?
It was a 56 unit inside of Oklahoma City. So definitely a huge cash flow market, on that side. And, lots of underwriting, of course, being very conservative. And I have a couple of partners that I work with on it I was really able to leverage. And so that's really where it was. And it was just an interesting property, great deal, great cash flow. So, I mean, with all these great numbers and being able to leverage, other partners and stuff, that really made it a little bit easier to go through the process, since I was trying to put, my feet on the ground pretty much to start, amping up this kind of stuff.
Yeah. How long ago was that? How long ago did you guys?
That was October of last year. So that was a year ago. Yeah.
Pretty recent. Yeah. So why Oklahoma? You're in this great market, right? You're in Dallas. I know it's hot, but it's also a great market for a lot of reasons for multifamily. What made you go to Oklahoma?
It is. And, DFW in general is of course, a great market, growing, population, jobs, etc. on there, which obviously kind of brings in a lot more either larger operators, institutional equity, or a lot of larger players that will, that are okay with getting smaller returns and, have, squeeze cap rates and things. And so there's a high amount of competition, especially whenever you're trying to gain a deal. Let's say I was going for my first deal in a Dallas market. Are they going to pick like my letter of intent over like an institutional that, could pretty much close the next day? It's pretty difficult if you don't have a large backing inside of DFW, unless there's other tertiary markets that you want to go into, which is kind of what led me into looking at, other places that were still in the driving distance and that I still enjoyed their demographics and psychographics and stuff. So that's kind of what led me into Oklahoma City, really.
Yeah. And then you found, so how do you go about doing that? Did you find partners there first and decide then that you were going to go, or did you do market research and then find some partners?
It was a little bit of both, really. I was able to find really another couple of partners that had the deal on there, and I partnered up with them to kind of build up that, from the ground up in a sense, and working on different facets of that style. But so really, I always liked the OKC market just because I had, 2 or 3 markets that I was interested in on the cash flow side. A lot of people were looking in Memphis at the time too, Memphis and Atlanta, and just some of these other places that are have a lot of growth and a lot of cash flow. And so the Oklahoma City was definitely on the top of my priority list just because of the driving distance that I could have.
Very cool. So what was your role in that first deal?
Yeah, it was raising capital and marketing, of course. Yeah.
That's cool. So obviously you had a strength in. So
yeah.
Can we talk a little bit about that? Obviously, I want to get to the marketing aspect of stuff, but capital raising is, I think we either talked on the call or beforehand, is such an important skill set to have, right? But obviously, right. You're a young guy. Was there any challenges in trying to raise that capital from that perspective, and how did you go about it?
Yeah, a lot of people don't really ask me that too much, and that's a really important, disadvantage to kind of say out loud, just because it's almost like an elephant in the room sometimes. Like if I go talk with an investor that's 50 or 60 years old and, I show up in a suit and tie and everything like that, but, I'm still, just 23 on that side, but being able to understand the model and multifamily and the market and just having your industry knowledge, I don't think it really matters what age you are about that. And since I had such an extensive, understanding way beforehand, I was able to really, be professional whenever I'm talking with people, and I'm just a good networker in general. So it's just being professional is always going to be important, because you can be unprofessional as a 60-year-old, and that it really doesn't matter as much with your age anymore, just because of how much we can like get knowledge online or through books or through people and stuff. And so I think that age gap really isn't going to matter as much as we keep going towards the future with it, and being able to leverage your partners and experience and understanding. I think that's really what you should talk about with somebody that may, not like, what your age is.
Yeah. No, it's so true. I think you've touched on so many great things there. For one, you leverage your team, right? So you had a team, so it wasn't just you, so people would feel comfortable with that. But
Right.
also, you gain that credibility, right? Because obviously, just from hearing you talk today, you're very knowledgeable, you're very smart, and you have an understanding of this space and what it takes to be successful. So I think those are all things, and like you said, it doesn't matter if you're 60 or if you're 20, right? Those are things you need to learn. And for anyone who wants to raise money, you've got to sound knowledgeable, right? The last thing you're going to do is
True.
give more money who doesn't understand what they're talking about, right? Give me $100,000, but I have no idea what I'm talking about. So I think,
Right.
yeah, and I think that's great that you pointed out, because age is just a number and it doesn't matter. As long as if you know what you're doing, you know what you're doing regardless of age. So that's pretty cool. How do you use some of your marketing skills then for that deal?
Yeah. So, I mean, it comes down a lot to, I'm really big inside of professionalism. And so I really put in those details inside of, whether that's for marketing collateral documents and pitch decks and, website updates and emails, whatever it may be, down to the T. I mean, down to your email signature, everything should be seamless and, look, around the brand, should look professional, and you should not give people a reason to not invest with you, really. So that's kind of what I focused on, was whenever I talk with people, whenever I network, it's never going to be, a burn a bridge type of situation. It's always going to be to network and connect. And hey, if you're interested, this is what I have. And so, that was the kind of mindset that I had with it, and being able to leverage the marketing documents that I had and the team and stuff. That's kind of the part that I played with it. And so being able to talk about the future too, because like, yeah, I'm trying to raise money for this deal, but hey, this is also like your investment is also in a relationship, for future opportunities as well. So I think that's an important aspect to understand, is that, whenever you talk to investors and even follow up with people too, that communication is so important, because you don't want to have just an investor for one deal. You want to have them for multiple deals, really bring up that retention. Because when you look at larger operators and larger firms and stuff, most of their capital doesn't come from new investors, and that's something that people don't really think about too, is trying to bring up your retention. And so I think that that's an important part to play in building those relationships. And even if somebody invests with you, the communication shouldn't stop, especially like since you put out reports and things, but really like connecting with people is important as well. And then you'll have, those investors for the future too.
Yeah. Especially when you point that out to them as well. I'm sure it helps them feel comfortable, because if you're investing for the long term with them, they're not thinking, okay, this guy's just trying to do one deal, burn my money and run off with it or whatever, right? You're building that relationship for the long term, right? For the next 10, 20, whatever, 30 years maybe perhaps. And
right.
Gives them a lot of comfort as well. That's really cool. So where were you finding the investors for these first deals? So, they have a deal, they've underwritten, it makes sense. Where's a good place to find investors?
Yeah, I think that's, a fully loaded question. And I think that there's a couple different pipelines that you can go into, and that you should really just focus in on one or two. Mm-hmm. And so what I would say really is that one of the crucial ways that people really do is that, in person, inside meetings, inside coffees, inside, different meetups and stuff, and going to events. That's always going to be a tried and true situation, where you go in there, and if you're really good at networking, I think that's the way to go. But sometimes people aren't as outgoing with that, or they don't want to leverage their experience in person because they don't have like a huge amount of, multifamily deals behind their belt. And so another facet I think is, through social media, through your website, through content, through going on podcasts like this and just networking with people online. You could even go down the paid advertising route. But, of course, the family and friends is going to be your first, and it should be your first basis.
Mm-hmm.
And then I think after that too, that referrals are strong. If you're really providing value to your current investor base or current people that you talk with, even if it's a small amount, you could always find at least, 1 to 5 people from your current, friends and family network. Like, hey, do you have somebody that I can connect and talk to? I think that, having that immediate and second degree connection is really important too, because then that'll open up much more opportunities for them to think inside their minds of the referral basis, because sometimes people won't really think about it unless you kind of remind them or tell them or try to, hint, for them to go into like a coffee or a dinner or something with one of their referrals and stuff and just reach out to people. But there's a couple of different facets and for you to do that, but it really does come down to trying to create a target audience as well, because so many different people are trying to attract passive investors and try to attract even institutional equity, and being able to have a mission statement, like who you're trying to help, what you're trying to do, and a certain audience that you want to go towards, whether that's small business owners or maybe people inside of tech or IT or doctors or lawyers, and just becoming specific inside of either job types, locations, or types of investments, even if you want to, and just really niching down inside of those things are going to put you way ahead of somebody else that's just trying to, shotgun out into the entire US. So I think that that's an important idea to understand too.
Yeah. Great advice. So from that 52 unit, right?
56.
56 unit. Have you guys done another deal since then, or was that?
Yeah, so that deal took a lot of work, and then COVID ended up happening, a couple months later, on that side afterwards, and so that kind of hindered, more of a conservatism side, but what it kind of molded into was that I wanted to build a really strong younger generation team, and we're going to be launching an investment fund in a couple of months on that side to raise money as an LP fund to invest in other operator deals. So instead of going the typical syndication route and worrying about asset management and different things, we're just going to create a fund, because capital raising is one of the most important factors and one that I'm passionate about too. And we're going to raise money for other deals and partner with people and kind of go that way. So that's kind of been my current focus for the past couple of months for us to be able to launch in a little bit.
Oh, cool. So like a fund of funds type of thing.
That's right. That's exactly what it is. And it's going to be inside of multifamily specifically, and we're going to get, certain returns and stuff, but it's going to be focused a lot on having a modern take into multifamily and kind of working towards, creating that brand identity around, something that's really, really special and, exclusive for people that want to invest and get that relationship. So that's kind of what we've been working on.
Yeah, that seems to be the way that a lot of people are heading now these days, right? Before, it was a capital raiser would come on board as part of the team, and they would just strictly raise the capital and be part of the GP. But it seems now that the fund of funds seems to be the way that a lot of stuff seems to be going. I've heard that mentioned quite a few times now recently. So
interesting.
That's it. Yeah. I think it's an interesting concept, that's for sure. Well, let's dive into a little bit more of the digital marketing, right? Because that's you're obviously very good at the capital raising, but I think the digital marketing, as we spoke beforehand, has been so important, but it's going to continue to grow and grow, I think, and get even more important, right? Because everyone's on Facebook, everyone's on LinkedIn, everyone's on Instagram, everyone's, uses their phone in day out, right?
That's right.
Maybe talk a little bit about how you work with clients, right? How do you start with clients, and does it vary, or does it you usually have a process to work with them?
Yes, yes and no. There's a couple of questions in there, and it does start out. It's always going to start out on the foundational basis. Where are you currently at with your digital presence, and where do you want to be? What are your goals? Because sometimes people will already have a great investor base, and they just want better brand awareness and better professionalism. Like that can be a goal. Or, if you don't have a current investor base, then I really think that one of the first things that you should focus on, besides a website, of course, is, your social media channels and your email marketing. I think that that's a very crucial, important aspect, because people can start creating these webinar funnels or something like that just to try to, build brand awareness, but also convert leads and prospects and people that may be interested in investing. But if they don't have this professional presence on there, then you're not going to build that trust between people. And that's where I think that social media and content kind of comes into play. Because on average, and I look at all these different studies and analytics and stuff on there, that it takes between 10 to 15 different touch points for a prospect to become like an interested investor inside of a deal. And so being able to leverage something like that, different touch points, they can be emails, they can be social media, they can be webinars or videos or even conversations. And so it's never going to be like a one and done type of situation where you'll, pay money for advertising and it's automatically going to convert into an investor, because people aren't going to give you their money if they don't trust you. They just won't. That's just a tried and true thing. And so you have to be able to build your presence around a certain audience, around a certain idea and what you're trying to go for. And people follow you because you give out value to them specifically. So that's why I think that targeting is so important. And that whenever I'm working with clients, I think about them in different phases. So, and it really goes from phase 0 to phase 5. So like a phase 0 investor would be somebody that hasn't done multifamily deals before, but maybe they had past experience in real estate or, different things, and they're trying to transition. So of course they would have a different marketing strategy than somebody who's a phase 5 who, has 100 million plus in multifamily already and wants to scale and really kind of automate more of the process. So depending on where you are, if you've done a couple multifamily deals, then you probably have some type of presence, but you're really not posting a lot, but you want to. So then where you should be, being able to focus on where you're at and where you want to go, like that's what's important. So if you don't have a professional presence, then you can easily go on Fiverr or Upwork or work with a designer and create professional covers and professional marketing materials. And then once you have that, then you have to have a professional website, because if you're posting content and trafficking people to your website, if there's no way for you to convert them into your email list or into your prospect investor list, then there's no reason for you to be on social media and posting content, because the whole reason for you to be, creating brand awareness and posting content is to convert that person, from the top of funnel into, the bottom of the funnel as an investor from your website, because that's where it all funnels down. So you have to understand where you're at and where you want to put your focus, but you're not going to be able to, traffic people without social media or content creation or, going on different podcasts like this. And even if you get website visitors on there, you have to make sure it's optimized for conversion. I think that's important. And once you get both of those facets, I think email marketing is where you'll take it up, even further, because you can start making lead nurture sequences and start having follow-up sequences every couple of weeks so that you can interact with your prospect base.
Yeah, very cool. Wow, this is fascinating stuff.
Yeah.
What do you find that some of the biggest mistakes people make when trying to convert those people that go to the website into their funnel?
Yeah, it comes down to somebody that's maybe in their 40s, 50s, or 60s that just pays a couple $100s to create a website, and they think that it's going to convert people when it really won't. Because in this digital age of 2020, really, you have to really gain people's trust there. If I go to a really crappy website, I'm really not going to be as inclined to put in my information, because it just doesn't look trustworthy. It doesn't look like something that is professional. And if somebody has this website that's really not that good looking, doesn't have brand colors, they don't really show me, what I'm trying to look for, then, I'm not going to put in my information to opt into whatever they have. And a lot of issues that I see is that they'll only have one opt-in, which I don't think, you should have multiple ways to capture people's information. And it shouldn't be something so broad like a passive investor guide in multifamily. There's hundreds, if not thousands, of those already out there. And that's not going to interest your prospect anymore. It's not going to interest the passive investor audience. It has to be something specific, on there, which is why I say the target audience is even more important. So I think that having multiple different call to actions on your website, whether that be, if you're interested in investing, put in your information here, here's this lead magnet that I have, here's this spreadsheet or cheat sheet, or here's these 3 video sequence on something specific, give give them, a couple different ways, because they're going to be mapping out through your website and looking at different stuff, looking at your blog, looking at this, looking at that. And if there's multiple different, times to ask you for their information, you're more inclined to get that conversion. So I think that that's something that people aren't utilizing. They think, oh, I just have this one opt-in, everybody's going to use that, but they won't. That's why they get less than 1% conversions. But
it's really interesting, yeah, because it's true. It's the 11 ways to invest passively, right? And then kind of that's the only call that you have. And also something that, as you were saying, that I'm sure people get hit different ways. Some people like video, some people like bullet points, some people like different stuff. So if you just have one, you're only appealing to maybe a certain type of person, whereas if you have all kinds of different ones, you can appeal to different kind of people. I think
that's exactly right, actually.
That's really interesting. Yeah. So let's go further down the funnel. So now you have these lead sources, right? Whatever it is, and they've entered their email. Mm-hmm. What then do you think is the best way to keep in touch with them? Just a monthly email list, a bi-weekly?
I think it will depend on how you capture them, because some people will put in their information to download whatever guide or whatever lead magnet you have, or even a company presentation if that's what you have in there. And you should have an automatic sequence in there. Of course, you'll get a notification, hey, somebody put in their information, or you should either reach out to them, or they should automatically get sent a welcome email with that information and a very limited highlight of your company. Don't make it super extensive, because they're not going to read it right there. They don't trust you yet. They don't know you yet either. So I think that after people opt into your website, into your information, whatever you offer, they need to go on what's called a lead nurture sequence. So you need to nurture them into understanding who you are and what you offer. So that can be, between a 5 to 7 email sequence over the next 2 weeks or something that gives them a crazy amount of value and has a call to action each time. And it shouldn't be intrusive. It shouldn't be annoying. It shouldn't be any of those things. It should add value to that specific client, that specific prospect, and give them so much interest and insight into what you offer that they will be inclined, to talk with you further about, investing or opportunities or what the process is. And so working backwards from that, if you understand who your target audience is, then you should know what questions they would ask, about that. What does the whole process look like? What does an onboarding process look like for a multifamily? Where do I send, the money? How does the syndication work? Or whatever certain questions that your audience is asking, answer those in that lead nurture sequence, and then give them a call to action at the end, about that. If you want to know more information, here's my calendar link. And then you automatically have, a direct call to action for people to talk with you, essentially automatic. And that's, really where a lot of this scalability can come into play too.
Yeah. And the whole goal with everything should be then to try and schedule a call, right? Or a meeting, whatever you
right.
Probably a call these days, but yeah.
Yeah, it's going through a whole qualification process too. And that's why I say that if somebody like yourself is using Calendly, you can have multiple meetings, right? And so that call to action will be a specific investor meeting where the opt-in will actually ask you, are you a accredited investor? Have you invested in multifamily before? Et cetera. Those specific questions, because then before you even get on the phone with them, you already know that they downloaded this document and they're interested and they're a qualified accredited investor. So they're more inclined, to invest with you or be interested, and you'll know off the bat. And so, you'll be able to know directly how to, really close them or talk with them on that phone call. So I think that's why it's important to really personalize your emails and to also understand, that prospect specifically, so then you can kind of taper, your pitch around that.
Yeah. And you talked about a targeted audience quite often, and obviously that's very important. But how do you decide on your targeted audience, right? How do you pick a targeted audience? Is that harder or easier than you'd think?
Well, I think it's harder than most people think, because they make it easier than it should be. Mm-hmm. So a lot of clients that I talk with, especially if I'm just giving advice or networking with people, and I ask them, do you have a target audience? Do you have a certain set of people you're going for? Oh yeah, absolutely. I'm going for somebody that has a good amount of money. They have a high, net worth job on there, and they're just looking to invest money passively because they don't have time to invest somewhere else actively or something. And that's pretty much 90% of all multifamily, operators, audiences that they're looking for. But you need to be more niche inside of that. And that's why I say sometimes if you don't know what your audience is, then location-based can be your best bet. Whether you invest locally or you invest in a certain market, then you just become known for that person. Like if you're in, you would be the person to go to in Dallas or in Las Vegas or whatever it is. And you would market that through your website, through your social media, through everything. And then people will know you're based out of Las Vegas. And, you talk with people that are in Las Vegas to invest, wherever. And if you do something like that too, then you can actually meet with people in person, face to face, which statistically just has a way better chance of building that relationship in the beginning and trusting people. So I think the sooner that you can talk with somebody face to face or through Zoom is going to be way better off than emails or on a phone call, because nothing matches even an in-person call, but at the least doing these Zoom calls and stuff, that's where you're going to start building those relationships and seeing somebody, see their expressions and see their interest. So that's what's important. But just back to that audience, you could even subset down into an age group, a job type, and a location. Like that will obviously give you a crazy, limited amount of people, but it can go down into, small business owners or, people that are residential flippers that want to diversify or, just something very specific, because then your brain already starts thinking, well, if somebody's interested inside small business, then maybe they'll already understand, a financial breakdown that I can give them about syndications or something. So that's why it's important to build those specific audiences.
Yeah, that's so true, because obviously then all the material that you provide them is going to be geared towards what kind of person that is, right?
Right.
If you make it broad, it's a 35 to 45-year-old white male who has disposable income that he's looking to invest. Well, is that a doctor or is that a self-employed person, right?
Right. That's millions and millions of people.
Yeah.
You're not gonna go through the grass. Nobody's gonna see you, and you're not gonna get any, SEO. You're not gonna get, any types of, information from other people, because there's already so many people above you. Why would they invest with you when they can invest with somebody else that's already broad too?
Yeah. Really interesting. So now that, with building a brand, obviously I'm sure that's one of the biggest things that you that you teach or
right.
help with, right? What are some of the biggest things that you feel like people miss with building a brand?
Yeah, I think that's consistent brand identity, whether that's through your brand colors, through your fonts. I mean, you should have a brand guide, because for two different reasons, actually. Because one, it'll keep you consistent through your content, through your marketing materials, through your website, through everything. You'll understand exactly what your brand looks like and what it's supposed to be. And then also, if you ever work with any contractors or work with any third party, people like myself, graphic designers or marketing, and you can give me that brand guide and I immediately understand exactly, what your marketing should look like, how it should be, and, make everything completely consistent. And it's just going to make everything seamless. And that's what you want, with an investor that's kind of looking at your brand, looking at your LinkedIn company page and looking at your website, and nothing matches. Then it's not going to make any sense. They're going to think, well, is this actually the same? Is this the right person? Is this the same company or something? So creating a brand isn't just, having your logo and your company name. It's about exactly how you perform your company identity. Sometimes people are a little bit more comedic. Sometimes people are a little bit more serious. So that's like a part of the brand, which will shine through everything else. So I think that's why your branding is important, because then you're going to understand exactly how you're going to market yourself and your company. So it's very important to understand.
Yeah, and then what would go in a brand guide, you think? What would you say?
Yeah.
In a brand guide?
So it comes down to your primary and secondary colors that you'll use for your logo, that you use for all your marketing materials, maybe even your fonts, your pictures, your professional pictures that you use with it, and just different things that involve inside of your brand that'll go with it, whether if you use more square or circle pictures, or, this is all of your different social media links, and, you don't want something that just isn't consistent with everything else. And so you have to ask and look at everything as far as your digital presence, and see if you're going to be, a type of company that is on, a dark shade of different blues and reds and stuff, but you need to pick down inside a certain subset of this information, and then you'll always be consistent with anything that you post or anything that you put out there. But
that's brilliant. I love that. I never thought of that before. Man, you're sharp. I love it. You're super sharp.
Yeah, thank you.
That's awesome. No, with, obviously there's all kinds of different social media platforms out there that you can use. Do you have a favorite, or do you like all of them? And I mean, specifically to capital raising, in terms of capital.
Yeah. No, I think that a lot of underutilization is actually in BiggerPockets sometimes. That's a specific real estate platform. And there's different versions that you can buy. You can have a free one, you can go premium, or you can go, even further than that. It's like a plus version or something. And you can actually have an opt-in straight from your company page on BiggerPockets. And, you can immediately get information from prospect investors. You can be posting on forums. You can comment with people. You can do so much on that platform, and it's real estate investing specific. And the thing is that with BiggerPockets and these search platforms is that, and even LinkedIn too, you can search specific job types. You can even search people that are interested in passive income specifically, and you can already find an audience that you can reach out to and network with. It really is that easy sometimes, but building the relationship is the hard part, not coming across as spam, and you shouldn't ask for anything up front. It's all about building that relationship, through your professional communication. So definitely leverage LinkedIn, and BiggerPockets should be, your best friends right now, especially since Facebook's audience and organic content reach is just so low on there. And Instagram, you can start posting content on Instagram, but it really needs to be professional to stand out there. And you have to know what to do to really grow that audience, which is why I think that LinkedIn is such a better platform if you're trying to pick a couple, because LinkedIn has crazy organic traffic right now, especially since they're trying to grow their platform and grow different ideas and stuff. And you can start targeting people specifically on LinkedIn and start sending out stuff and message people directly. So I would definitely focus on LinkedIn and BiggerPockets, at least until you start building up a really strong presence. And then you can start going out to different platforms, because you don't want to overwhelm yourself in the beginning too, because then you'll have that paralysis just like you would with, analyzing deals.
Yeah. One thing I hear over and over again from you as well is professionalism, right?
Right.
I can't understand that, but how, and you've talked a little bit about it, but for someone who wants to make sure that they come across professional and they have that professionalism in everything that they send out and do you have some tips where they can do, or some suggestions?
Yeah, I would say don't do it fast, do it well on that side. And especially like if you write your own emails, of course, having a second look and making your emails, split up into different paragraphs, or putting in that professional, I do say professional line, but that really innovative email signature, something that is really clean and has your logo, it has a picture of you, it has all the information that somebody would need. That goes a lot further away than somebody that has no email picture and they just send out this email. Maybe there's like a grammatical error. Who are you really going to keep talking with, versus those two people? So that's kind of what it comes down to, is making yourself stand out, and also never giving somebody a reason to not keep talking with you or not invest with you. So you want to make your whole company and your whole, brand really seamless, in a sense where there's no reason for somebody not to invest with you, and it makes it really easy for them to invest with you if they're interested. So those are the two things that you should really focus on. Yeah.
No, that makes a lot of sense, because who's going to give you 100,000 if you, like you said, you can't spell stuff right, or you're not even doing the very basic stuff correctly. So that's brilliant. What about Instagram? Do you have any tips for people who are wanting to use Instagram? Or do you think that's a good platform to meet potential investors, or do you think that's not the
It's a loaded question, because I also think that whenever you're choosing your target audience, if I'm somebody that's literally trying to target people that want to invest with their retirement account, then there really shouldn't be a reason I should have an Instagram account, because I'm not going to go towards my target audience on that. So I think that's one of the pillars of it. And also to stand out inside Instagram, you have to have, whether that's beautiful infographics or crazy consistency, because Instagram has such a crazy half-life. It's so short that in order for you to really grow and start putting out stuff, you should be putting out content daily, which is a lot of times overwhelming to people. So people think that Instagram isn't getting good growth just because they're not posting enough, they're not doing something specific, they're copying somebody else. And so, of course, they're not going to get any growth or something from it. But one of our clients, we're posting on his Instagram, and we're able to build up to 1,000 followers in like 30 days. And we're able to raise $125,000 just from Instagram because we leveraged the bios that you have on there and the stories and the posts. So you should be posting content that adds value and then giving people call to actions if they're interested. And then on your stories of Instagram or even Facebook now, since they have some stories too, you should give people even more content to absorb. Because if I go to your company Instagram and you're posting on your story, that kind of tells me that you're active on that social media platform, which is always going to be a good thing. So it's definitely one of the harder platforms to grow because there's a good amount of competition and there's a couple different factors that go into play. But it will never hurt you to have a presence on there. It'll just be about efficiency and optimization and what you should be focusing on. So even if you just have a presence and a couple of posts on there, that looks better than having nothing, I would say. And you can, put that traffic from different places as well, to see different social medias. But I don't think that Instagram should be your focus as much as other platforms, unless you're going for that certain target audience, maybe even ultra high net worth investors that are younger. That would be an Instagram type of situation. So.
Yeah, so true. Yeah, because I know it's a generalization, but I'm sure it's a younger crowd that's on Instagram, right? I know plenty of, older people per se that are on there.
Right. But then you look at Grant Cardone, on there, who is able to raise millions of dollars a day, through Instagram and Instagram Live specifically. So if you build a larger following, whatever platform it is, you're going to have, a reach, to a good amount of people. But even look at Brandon Turner of Bigger Pockets. He has over 120,000 followers or something like that on there. He has a crazy amount of reach because he's been posting consistently. He gives out great content. He's really inside the community. And that's really what you should strive for if you want to, be on Instagram. But
yeah. Well, I'm sure a lot of that is come from the Bigger Pockets podcast, I'm sure, as well.
Yeah.
He provides a lot of great content, but definitely the podcast is huge.
Yeah.
How do you talk to people about how to leverage the podcast? How do you like to use the podcast in your favor? And again, it might be a loaded question depending on your audience. I understand that, but
I think it depends if you're talking about somebody who owns their own podcast that does it, or somebody that wants to be on podcasts. Either way, it's reusable social media content and recyclable, because let's say you have 50 podcast interviews and stuff that's posted on there. You can still use content from your first episode after a year, because people won't remember that specific episode, and you can give them that one gold nugget from there. So I think putting out podcast videos and chopping them up, you're going to have an unlimited amount of content, and you can even use free platforms and websites that will convert your podcast interviews into copywriting. Mm-hmm. And then you can even reuse that content, put it into a blog, put it on your website, or download that into social media content. So podcast interviews really have an unlimited amount of source if you're creative about it, and you can constantly use that for collaboration as well. Like how we're doing this podcast, right? It's going to grow your podcast viewing because I'm going to post about it because I was in it. So that really does collaborate and grow your brand, because you're collaborating with people that have a different or another, audience or following of theirs that you can leverage and, attract those people as well, because they'll be repurposing and reposting the content that you post since I was a guest on it.
Mm-hmm. And then, but what about growing your podcast? Is that more of an organic thing? Like, it's great, but I'm also interested how, you obviously don't want to just grow it exponentially, because numbers doesn't equal conversion, right? But how do you have any suggestions on how people can grow their podcast?
Yeah, having a different format So, like, you're doing very well on there. You made it kind of funny, but also you have, certain questions to ask and certain things to do. And you have your personality, which should shine through the podcast, because if every podcast is the same, then I'm just going to listen to one of them. So, that's where, like, being different, that's, a big part of my life too, is that, just being different for whatever you do, that's how you stand out and that's how you grow, and making something interesting. And so I think that that's a great way for you to start too. If you're starting out a podcast, make sure it's something that's different and it brings real value, and don't do something the same as everybody else does, or else there's no reason for people to follow you over somebody else. And then on the growth aspect, collaboration is your best friend. Getting people, like myself or other people, where if you do research and look at people with larger followings, try to get them as a guest on your podcast, because then that'll get you a larger reach, and have a call to action specifically, whether that's in every episode or that's in, a guest on there. Like, you could give me a link that I should post out for the podcast, and that'll help, it grow, a specific link to subscribe to it or something. But making it known exactly how to follow your podcast, make it known that you have a podcast, all these different things, are really going to help it grow. But the main thing too is going to be you're consistent with a podcast specifically. I'm more inclined to listen to your podcast if, for one, I enjoy it. But if I know in my head already that you post every Monday and Friday, let's say, then I'm gonna listen to every episode, because I know exactly when it's going to come out and I know what to expect. So I think that if you give your listeners an expectation of, they're going to be, between 20 and 30 minutes. Usually they're going to have a great guest, great questions. It's going to be a fun time, and I'm going to post every Monday and Friday at this time. Then, that's what people on YouTube do, and that's how they grow their audience, is consistent. And it's going to help with all the algorithms. It's going to help you grow, because you're going to be pumping out content and all of this. So I think that that's what you should focus on, as well as that consistency and giving value to people, however you want to do it, but do it differently.
Yeah, this is gold, man. This is gold. I love it. It's brilliant. You touched on it there. We've talked about some other stuff, but maybe YouTube. How do you feel about YouTube? Do you like YouTube, or do you think might not be?
Yeah. I love YouTube. YouTube is starting to become the platform where people will absorb the most content out of any other social media platform. And if you're trying to put out something that I would sit down and listen to and take notes on, YouTube is where it's at. YouTube is where your podcast should go as well. Because sometimes, I'll be doing work and I'll listen to a podcast, but I want to see them too. I want to know them. I want to know that person and see them, recording this podcast on that Zoom or something, and see them laugh and, really, be there, in a sense. And so I think that YouTube is a strong platform, but it all goes back to the consistency as well. And, creating a consistent brand. If you're posting videos that add value to people on a consistent basis, then you're going to start gaining, momentum on there. But if you're just posting random stuff and doing this and doing that, and you're not posting content that your audience would want to watch, then, it's not going to help you grow. You're not going to really go anywhere. And, with YouTube as well, collaboration is also king. And so, you can collaborate with other YouTubers and other people and get shout outs and cross collaborate with your other platforms. So YouTube is definitely its own beast. And I think that you can do a lot of research with YouTube specifically and try to understand that model. But definitely giving people value and also keeping that attention span sometimes will make you better off through YouTube than other platforms. Because if you want somebody to listen or watch your video for 10 to 15 minutes and sit down with it, then it needs to be engaging. It needs to give them information that they can absorb and take somewhere else. So those are like my top, thoughts that I'm thinking right now. But YouTube is just such its own beast. But
yeah, it is. But it's interesting you said that you. I always assumed that the longer interviews that I do, I put them on YouTube, but I have thought that they might not be that useful, because who sits for an hour and 15 and watches an interview? You're going to listen to it on a podcast maybe, but it was also, I never thought about that. People like to watch your facial expressions and the guest facial expressions. Mm-hmm. It's one thing to hear it, but when you see it and people are living it and they're animated or whatever, it's a different thing. So that's really interesting. I never thought
it is. And you'd be surprised how many people will work and listen to a podcast at the same time. I do it literally all the time. And so I will put something up on YouTube and not on Spotify or something, because YouTube is just so easy and seamless, right? It goes back to that factor. I can search up something I want to listen to, or somebody that has my trust with them, with their brand, and listen to something while I'm working on something else. And so you'll get a lot of traction from that if you optimize for that kind of mindset, you know, and just make it interesting for people, because there will be somebody that will sit down and directly watch your video if you give them a reason to. So if it's something that is general, that there's already 1,000 videos out there, then, you know, that's probably not going to be as interesting for something specific, like how to, you know, invest in a multifamily deal next week. Like, that's going to be something I want to watch, because I want to know, like, oh, what is that about? You know, so giving people an interest and something that they can get value from, you know, is really important with these types of videos.
Yeah. And this is all really good stuff. I think this has been nothing but pure gold and pure value but honestly, not really for me, for sure, you know.
Yeah.
Selfish questions here, because I'm fascinated by all this stuff, and I'm definitely going to go back and watch all that. So the good thing is, I like that you said that with podcasts, you got to be different, right? So with that, you know, I told you before, I have some wrestling themed real estate questions that I like to ask this, which is cool. I was like that you said, I was like, okay, I have one thing at least for sure that I can that I can include in my podcast, that it's different for sure. So, but with that, I give you a little bit of a heads up. What would be if you had a wrestling name, what would it be?
You know, and I think there's probably one already out there too, but I like to be called the Flash, really. You know, I'm a big boxer too, you know, on there. And so I think, you know, speed's always been a very important part of my personality too. So probably like the Flash or something along those lines, I think.
I don't think there's a wrestler called the Flash.
Oh, yeah.
There is now. AKA Nick Love. Cool.
That's right.
Flash. Yeah, I like that. Every wrestler has a special move or a signature move. What would your signature move be in real estate?
It would definitely be probably leveraging that digital presence on there, trying to create something where I can help people with their digital presence, you know, whether that's through social media, whether that's through email marketing or something, but providing that value, because you're really in the marketing business just as much as you're in the investment business too. And so I think that marketing is just one of those, you know, one of the most important traits that people kind of undervalue. But it's really where you're going to get into your next level each time. You know, you just scale up a different set of marketing. So that's why I think, you know, that's probably going to be what I take to the table every time.
Yeah, absolutely. Great skill to have. What's been the biggest body slam you've taken in your real estate investing career?
It's definitely whenever I first started out working with clients and I understood that, you know, like having contractual obligations, like with clients, you know, I should work on a 3 or 6 month basis. But in the beginning, you know, it was just really on a month to month, like, hey, you know, I want to work with you digital marketing wise. And, you know, this was years and years ago. And I didn't work with people and have a contract so they could really drop at any time. And that kind of boned me in the end, because I didn't have that backing and people didn't understand they're supposed to be with you for months, you know, to get, you know, great results and work with you and stuff. And so that was a real hit into my gut whenever I had, you know, a couple of people that would cancel at once, and then, you know, the revenue would just immediately go down and you would have to really kind of build yourself back up into, you know, building back that company. So I think that's something to take as well with people.
Yeah, absolutely. So how do you work with people now?
So now it's all through contracts, you know, understanding that, you know, we have certain contract minimums, you know, 3 months, you know, at least to work with us. And then that's like for both of us too, because I'm going to get you way, way, way better results working with you for 3 months than just 1 month. Mm-hmm. And, you know, it wouldn't want to be a waste of money, you know, for you just to do 1 month and not try to understand where we're trying to go and give you all of that information. So that's how we do now. Yeah,
that makes sense. Because also stuff doesn't happen overnight, right? You can't be
won't.
Hey, build my brand by tomorrow, you know, but if you have a year,
right,
the longer out it is, it's much easier to build something over a year than over a month. Makes perfect sense. Was there a moment that you were standing on the top rope getting ready to jump? What was it and how did you overcome it?
Yeah, I think that main part too was whenever I was quitting my job to work digital marketing full time, and of course, you know, real estate with that. And that's a big level for people to go into. And so I think that's a huge question, and something that's weighed differently for everyone. Your risks and obligations and things, those are all come into play. But at some point, going all in, you're always going to, put more effort than, if you wouldn't. And so just having that, whenever you want to go all in, just go fucking all in, and just really, being able to leverage and understand the pros and cons of, quitting, whatever full-time gig you have or something, and going for a passion, or going for multifamily, or going for real estate. It's an important decision to come to. But if you go all in, then, there's no plan B now. You have to put in all your effort, and it changes your mindset completely. And I think that that's an important aspect to understand, because now you have to make it work. Now it's like, oh, I want to make this work. Now it's like, I have to, which it changes things for the better usually. But
yeah, definitely. It's burning those ships, right? You have, like you said, you have, then you use different words, right? I have to. If you have the choice, you might not always do it, right? But if you have no choice, there's only one thing you can do. So I think that's cool that you talked about. Well, cool, man. Well, this has been literally a phenomenal interview. It's been so cool to listen to everything you do. And as I told you a few times, you're just such a sharp, smart guy. You understand it. You understand the space perfectly, and you explain it really well as well. So I really appreciate you taking the time and explaining all that to us today, to everyone who listened. And look, everyone value out of that today for sure, man. For sure. Before we go, where can people get in contact with you and find out more about what you're doing?
Yeah, you can add me or connect with me on LinkedIn. It's just Nick Love with a check mark on there, or you can just email me at nick@digitalsyndicators.com. Either way, I love to network with people. So, wherever you want to find me, I'm there.
Cool. Well, thank you so much, man. I really appreciate you taking the time today. That was a real fun interview. Go ahead.
Yeah, no, thank you very much. I appreciate you having me on here.